Good evening, 6:16 p.m. Eastern Standard Time on the East Coast in the United States of America. I'm XRP Future Millionaire T-Speaker 222 XRP Future Millionaire with the side bet on XLM and Future Digibite. Oh, gee, so the gold markets, crude oil and commodities markets have opened back up. Gold right now is down just about 0.4% to 17.95. We're still under the 18 handle, so the 1800 handle, so that's something to watch. Silver, we're down 0.02% at the opening right now at 22.33. So right now, I mean, we're not looking terrible, but the problem is much like crypto, we came down and we could be on a continuation pattern to the downside here, ladies and gentlemen. So I'd be watching very carefully. We're up over the levels I would like to be in right now after this consolidation, and it looks like to me this week could be a tricky one for commodities. It looks like we created an M-topping reversal, and I think we're on a right arm. So it's either going to play out like that or we're going to come back above the 4-hour time frame at 1800 and ride bullish all the way up to 1860, because you could also say that we have, if we don't do this and use this, so we came up here, let me show you. So one could say if we come up like this and we hold this somehow instead of doing this, because to me, when you spread this out, you can see it created this off and then the side. I mean, it looks like, and then you could say that was kind of an arm to a head to this and down. And that's what I'm starting to see here. But one could also say that we could have been starting a cup and handle here. So it's very tricky. Either way, I don't think gold's going to sustain this. I think what we're working on, which would be more, so a 1, 2, right, go up. Now we're on a right arm, right? This could technically be a longer right arm and a head. But if we come down here and hit this, that's 3 touches. But what if we come back down to the accumulation zone to right here? I think there's a very strong possibility in the very short term, because Basel 3 is going to come into effect eventually here. I think 1683, we're trying to get back down to. I don't know why, but I really feel that way. And being rejected by the 4-hour time frame and looking like we're on a bearish continuation, to me, I feel like 1757 is next. And I know that goes against some of the opposite of what some are saying, but I really think a correction needs to happen in gold, and in particular silver as well. Once we came under that 4-hour time frame, I really think silver has a chance to come down to 1764 before we have the big move. I do. I know we're on a bull flag here. And if we break down, any lower than we were, maybe not 1764, but I think, we're going to come and retest this and at least make a reversal. But I feel like it could come down to 1767. That's just something I personally been watching. So, I mean, to me, it just looks like we have to come down. I can't help what I'm seeing. So, maybe it'll just be a retest at 2143. But it definitely looks like something needs to happen or needs to give. So that's an extended look at the gold and silver markets. We could go over crude oil real quick. Crude oil is at 78.09. Quite opposite from gold and silver. This is very bullish right now. It had a nice W reversal right on the daily time frame. And now we're going to have to decide what we do up here at $84. But that's still a little bit of room. Now that here's the key. We broke over this. Now, do we push back down and get squeezed and come back down and retest here maybe or farther? Or do we use this cup and handle right here as a nice stable bouncing point and we go farther and project ourselves up here to about 83.67? That's what I'm watching for. So you either get rejected here or you don't. So that's as easy as I can make it. And then I'm going to look at the XRP and the XLM chart, because this update, I just did an XRP update. You guys already know what's going on with XRP. Nothing's changed. XLM, though, I wanted to touch him because I have something very special for XLM. So XLM, I mean, does that look like a reversal? Does that look like that could be an M? I mean, we definitely failed the cup and handle, and we failed the second cup and handle we made. You can see the handle, and then we poured out. So that looks like an M, but we have the 25.4 support that we're trying to stay on. We're being squeezed between 26.4 resistance and 25.4 support. It's that simple. It looks like a continuation pattern to the downside to me. When this plays out completely, I really think we have to come to 22.1 and possibly down to that 16.6 level. If we were to break all the way through these levels, we do have an accumulation zone at 19.9, so That's basically what you'd be watching for XLM. There's nothing more I can tell you guys until we break. Because right now we're squeezed in between a very tight spot now in all of these. And then DGB while I'm on the screen. DGB squeezed. These are the scenarios. I don't know. If we get squeezed down and we break down and we can't break the 2898 resistance. Right now, if you look with DGB, we fell back below it. Even with the better than 5% push earlier, we've fallen back through it now. So we are using that as resistance, it looks like, on a bear pennant. This looks like it's finishing off a bear pennant below resistance in the daily time frame. That I could be misreading the scenario, but it looks like we're creating this good old-fashioned golf club as we talk about. So that's what I'd be paying heavy attention to. As you can see, Bitcoin fell back through 42,000. So XRP is underneath the 76,850, but we were being squeezed between those two zones. That's the 30-minute time frame and the 200-day moving average. And then we had 75 cents, which is the support resistance right here. And we came up before. We came through it, and we're trying to hold it, but we're squeezed, guys. We are so squeezed. I feel like these are going to continue to the downside, and I can't keep saying it enough. Yes, there's room for it to squeeze up a little bit, and that's why I keep covering the 1,500-point swing up, or maybe, you know, if it got onto a huge push like the 44.2, but I don't see it. I keep seeing 42, 445 squeezing us and pushing us back down in Bitcoin, and that's exactly what's been happening. I can't make it any clearer what I think is going to happen. You can almost say, like, that's an expanded left shoulder. Obviously, that I'm tapping versatile on the head, and this is like a right shoulder. And my whole argument is, with the way that this is shaped, isn't it more than likely that once we come down and retrace and hit this area or even here, because you see we go equal, like we always do across these, ladies and gentlemen. The market's fishy. It always does the same shit. So we haven't had that wick down to that 39,590. So wouldn't it be just like Bitcoin to get that equal? See, now you have equal. And then bounce off of here to make an overlasting shoulder. I think I went up just a tad too high. Here, we'll fix that. But you guys see what I'm saying. I just wanted you guys to hear me say it, and then I'll show you. Ah, shit, I just deleted one of my arrows. Forever hold your peace, because we probably don't know where it's at. So, here's what I'm saying. So, we come down. We do the exact same thing on the other side. So, we hit this 39,456, whatever it is right here. Then we swing back around and create the arm. Unless, the only way that this isn't going to happen, right, is if that part right here already came up high enough to satisfy this. Because this was supposed to stay as high as this, and since it broke past that, could we dare say that that could have been the right shoulder? We could, but I think it would look more prominent if we came up in my scenario. So if we were to hold this, you know, and we could even come down to 38,057 and satisfy that dip and kind of do it in an inverted way, right? And come around. So that's the scenario that we'd be looking at. Now, does Bitcoin look better like that or better the other way? I could see it both ways. I just don't see Bitcoin not coming down farther. And if we fall through 38,000, guys, I'm being dead serious. If we fall through that 38,056 area, the next zone is the accumulation zone of Bitcoin. And that's all the way down there at about 29,054. You would have stops along the way at 34,156 and 32,000. That's as straight, bold, and to the point as I can get you on Bitcoin. And then obviously, XRP will follow Bitcoin's nuts closer than the hair on my nuts. So, that's all I can say about that. So, let's do the XLM Stellar reading real quick. How does the chart look Sunday? Stellar receives an average long-term technical score of 65 from investors, observers, research based on historical trading patterns, proprietary scoring systems, and we already know how this works. So, proprietary scoring system weighs price movement from recent months to a year, analyzes the coin's support and resistance levels, and where it is relative to long-term averages to determine where it's a strong buy and hold investment opportunity. XLM currently holds a superior long-term technical analysis score than 65% of cryptos in circulation. So that's not a terrible thing. This ranking metric is most useful to buy and hold type investors looking for strong, steady growth when allocating their assets. Coins with a high long and short-term technical score can help indicate assets that have bottomed out, providing investors a chance to buy the dip. So an investor observer, so Stellar getting a 65 long-term technical rank. Find out, blah, 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 we don't care. So the technical analysis, Stellar's price is down 6 cents, 19.70% below its 100-day moving average price of 33 cents, as its price at the moment sits at 26 cents. Additionally, XLM is 6 cents, or 5,384.59% negative, higher than the 52-week low price of 20 cents, while 54 cents minus 1,222% under its 52-week high of 80 cents. The current trading price in relation to its long-term average along with its 52-week high and low gives XLM an average long-term technical score of 65. Long-term trading movement of Stellar suggests that the investors are neutral on the coin at the moment. Stellar has a market capitalization of $6.457 billion and a relatively high average daily volume with $2.067 billion. Or wait a minute. Yeah, $2.067 billion worth of currency traded over the typical 24-hour period. Over the last 24 hours, XLM's volume is below its 7-day average with $297,676,076.76 exchanged. This coin subclass digital money. Digital money is an asset, commodity, or currency intended to maintain value and liquidity over time so that it may be used the same way as fiat currencies are used. So that's what I wanted you guys to see on XLM. And then Bitcoin crash ahead. Expert warns higher inflation could whip Bitcoin price to 30K. The warning appears against the U.S. Federal Reserve's intention to tighten its asset purchasing program rapidly following by 3 rate hikes in 2022. Bitcoin may end up falling to as low as 30,000 if the U.S. inflation data to be released on Wednesday comes any higher than forecasted, warns Alex Kruger. And that's this Wednesday coming up. That's why I wanted to read this. Founder of AK Capital, a New York-based asset management firm. The market expects the widely followed consumer price index, CPI, to rise to 7.1%. Go follow Peter Schiff on YouTube. He's the best in the business when it comes to covering the CPI and other things when it comes to the U.S. economy. He's the chief financial officer of Euro-Pacific Capital. For the year through December and 0.4% month over month, this surge highlights why the U.S. Federal Reserve officials have been rooting for a faster normalization of their monetary policy than anticipated earlier. So you break down the CPI, broad gains in key categories contributed to spike in annual headline U.S. inflation. The CPI year-over-year NSA, goods excluding food and energy, is in pink. The CPI is year-over-year is in black or grayish, whatever, black maybe. You see how high it is at 6.8. The core CPI excluding food and energy year-over-year is at 1.9, roughly. Or no, 4.9. The goods excluding food and energy is at 1.9. Food is at just about 4.9. And energy is all the way up at 6. So further supporting their preparation is a normalizing labor market, including a rise in income and falling unemployment claims, according to data released on January 7th. Crypto assets are at the furthest end of the risk curve, tweeted Kruger on Sunday, adding that since they had benefited from the Fed's extraordinarily lax monetary policy, it should suffice to say that they would suffer as an unexpectedly tighter policy shifts money into safer class assets. Bitcoin is now a macro asset that trades as a proxy for liquidity conditions. As liquidity diminishes, macro players now in the fray sell Bitcoin and all of the crypto follows. Well, the good thing is I cover the commodities markets and the physical bullion better than anybody in crypto. The first interest rate hike in March 2022. Also, Vincenzo's Gold Crypto Investing does it as well. The Fed has been buying $80 billion worth of government bonds and $40 billion worth of mortgage-backed securities every month since March 2020. Meanwhile, the U.S. Central Bank has kept its benchmark interest rate near zero, thus making lending to individuals and businesses cheaper. But the collateral damage of a loose monetary policy is higher inflation, while reached 6.8% in November 2021, the highest in almost 4 decades. So now the Fed, which once claimed the rising consumer prices are transitory, which I told you from the beginning, it was horseshit. There was zero chance this was transitory. And the more that Powell kept talking about, the dumber he sounded, until eventually he had to stop using the term altogether. Has switched its stance from expecting no rate hikes in 2022 to discussing 3, as we've talked about, 3 rate hikes alongside their balance sheet normalization. It's more dramatic than what we anticipated, and the Fed's pivot to a more hawkish stance has been the surprise, Leo Grohowski, the chief investment officer of BNY Mellon Wealth Management, told CBC, adding, well, if you would have watched the XRP Future Millionaire, this would have been no surprise to you because we've been on top of this. It's amazing that the XRP Future Millionaire can see this and understand this and know this to be true and relay it to my audience. But yet all the experts that claim to know it all still don't have a fucking clue. It's that simple. Most market participants expected higher rates, less accommodative monetary policy, but when you look at the Fed funds implying a 90% chance of a hike in March, on New Year's Eve, that was just 63%. Huh. What a crazy shift now that we're in 2022, because you'll say whatever you want in 2021, that you can do whatever the hell you want. I would say I'm no expert, but I am. But look at that chart just from here. What does that look like to you guys? That does not look good. That looks like a played out. All right. Get this fucking thing out. You guys are probably like, what the hell is he doing? Hold on. I gotta get this fucking pen. All right. So, look at this chart. So, when we're looking at this, we've got all the way up here. I should, nah. But we've got up on the left side, right side, we've got, you know, it's all unilaterally created in the same exact symmetry. It's come up to a superior double top up here. And I don't know. This doesn't look good. Doesn't look good. So we've got that. We got the chart. So now collateral damage. All right. So we already seen this. And now we go into the mini bear market. So Mike McGlone, the Cedar commodity strategist at Bloomberg Intelligence, called $40,000 an important support level in the Bitcoin market. Furthermore, he anticipated that the cryptocurrency would eventually come out of its bearish phase as the world becomes digital and treats Bitcoin as collateral. I could see that. It's just if we break 40,000, we're coming down. See the 29,796? That's the accumulation zone. We're probably going to have to come back down there. The statement arrived as Bitcoin's drop from its November 8th record high of 69K is now over 40%. According to Eric Irvin, chief executive officer at Block Force Capital, the drop has primarily washed off recent investors, leaving the market with long-term holders. It could be the beginning of a mini bear market, the executive told Bloomberg, adding that such corrections are completely normal for crypto investors. So Bitcoin performs classic bounce at 40.7K as Bitcoin price comes full circle from January 2021. Kruger also noted that Bitcoin has already dropped too much from its record highs insofar that it now stands technically oversold. So if the CPI reading surprises on the downside, markets could expect the Bitcoin price to pop and trend for a while. Wednesday we'll have the U.S. inflation data, Kruger said, adding, think prices should chop around 41 to 44K until then, with an upwards skew given how strong the rejection of the lows have been. So he's just saying if there's a low CPI number, which obviously that would help bring the prices up. Now, my thing is I think it's going to be record high CPI, so it's going to be a disaster on Wednesday initially. Make sure to hit that like button, turn that bell notification on, and subscribe to the channel if you want to, if you need to, if you aspire to. Oh, look at that. When I clicked on that accidentally, there's some lower back pain for you. So stay blessed, everybody. Hashtag be better, do better. Hashtag, oh, this